Hey, what's going on, everyone? Welcome to another episode of Smart Money Sundays. I'm going to be going over four pairs today: GBP USD, GBP CAD, AUD USD, and AUD JPY. I'm not going to go over a ton today just because I feel like it would be more beneficial for you to look at these videos, just a few pairs that we go over, understand the concepts that we're talking about here, and then apply them to your own analysis. That is really how you learn, and that is how you become profitable over your experience as a Forex trader. All right, so I'm going to start off with GBP USD. I'm going to be doing a little bit of a top down to kind of show you guys what we look for specifically to start the week. Obviously, we do not trade on Sundays. For those of you who have tuned into our videos multiple times, we don't trade on Sundays, and I would not recommend you guys do the same. I would wait till Monday morning New York session before looking at setup. Sunday can very well be a manipulative day. When market opens, could be very volatile. Not really good for smart money concepts, nor really any other strategy. It's just sort of random movements, taking liquidity from the prior week. So I just like to wait for New York session on Monday morning. Don't really like trading Asian. Anyways, continuing here, I'm going to go to the daily time frame. Obviously, we are very, very bullish, as you can see. That's just higher time frame directional bias there. I highlighted this region 1.427. Now, 1.427 is really in this situation. I'm just going to do bar replay here. I'm going to show you exactly what we're looking for within this region of price. So hopping down to a lower time frame, 1.427 really is, we have equal highs right in here. We have imbalance fill. This is really where our last buy before the sell was, before we went on this huge pullback phase. Right? We swept liquidity here. We swept liquidity to the left just by a little bit. Right? So this is really the most generalized area that price will probably push up into, right? Just to give a general idea of where we could come into psychological level. Now we could scale in and potentially look for taking profit within this last buy to sell move, but since this is a psych level, just above equal highs with imbalance, I like to this level for targets on any buys that we do take. All right, now scaling back out to current price, we can see that we have accumulated a massive liquidity. Okay, equal highs, equal highs, equal highs, equal highs. We have yet to take out that liquidity. Now, if we already go short, which I expect to pull back eventually, we do have to come up into this last buy to sell move. Okay, this is the last buying volume before the sell-off. We have to mitigate these orders before we can continue short, and I expect us to take liquidity here first. So have some sort of buy to sell before potentially seeing some down movement, some lower prices. Okay, so that's exactly what price does. It usually generates liquidity before coming up into a level, because if it comes up into a level, we know we have to come up into here. It'll likely take some form of liquidity while it's doing so. Okay, just a tactic the banks use really to take your stops and hit the levels that they were always intended to hit. We have equal highs in here as well, so I think further prices could be expected. So looking at price in here. Now I know it's blurry and I'm zoomed out, but I will zoom in here and it'll be a little bit more clear. We do have this level here, 1.36. Now, do I expect it to come all the way back down into here? No, but it could. If it does, then I'll look for buying opportunities in and around these two levels here. Okay, we have our last buying volume. Just kind of scale in a little bit. Our last buying volume right in here, and then we have psychological level 1.36. I feel like that's a good area to be looking for buys if we do come all the way down into these levels. We can see clearly that we swept all this liquidity, this sell to buy before a massive, massive move. And we can see that the low here came into our last selling volume within this swing point as well. All right, this is just, me generalizing all the concepts. I'm not going to go into so much detail within these videos. That is for VIP and the courses. Just to give you a general overview of how we kind of look at charts. Now, there is a specific criteria when price does come down into these sort of levels, if it's going to. I don't expect it to, but if it does, then we have to look for specific things within this to really make sure that we understand and know that it will go along from these levels. We have to confirm it. Now, we have our own criteria for confirming that, and that is within the courses and our VIP as well. So continuing, we have equal highs, obviously, just mentioned. We are in a bullish uptrend. We have broken structure back up to the upside. You can see the swing point here. We failed to make a lower low, and then we made a higher high. So a higher low should be expected, and then another higher high back up into our 1.4080 level, which I just mentioned before. And then ultimately back up into 1.427 if we do break this level here. All right, so lower time frames. Right in here, we came down into imbalance perfectly after breaking structure at a lower time frame here. We created more liquidity. Again, that's exactly what price loves to do before coming down or coming up into a level. So scaling into this, we generated liquidity, had a sell to buy, and I'm just going to go bar replay here. I'm going to scale into this region of price, and this is an actual a trade setup that you could have taken last week if you had seen it. So 5-minute time frame, we can see that we had our last sell before the buy. So what I'm going to do is I'm going to simply pull a fib from this high here to this low here. We can see that the 50% of this lines up with 1.3720 psychological level here for GBP USD. Kind of lines up with prior structure where we rejected price to begin with. We can see that this price in here, 1.36937, was met perfectly with the imbalance fill and the last selling volume before the buy up. Really our last selling volume region of price here. Okay, so having that reaction and breaking structure, now we know that 1.372 is a valid level to be taking buys. Now, exactly what happened here? Well, we zoom all the way back out, go back to the hourly. We zoom back out, that's exactly where we came into, and we did that exact same thing again. You can see 1.327 had a little bit of drawdown, but a very nice reaction from that. Again, generating more liquidity, equal lows. Why do we do this? Retail traders trade from support. They want to be buying at support. Okay, these two levels here, we came down again. People were buying, right? Exactly. In profit a little bit. Nope, right back to the downside, taking their liquidity. That is what generates the sponsor candles. Okay, so selling volume was influx into the market, buying volume. We can see the law of effort here. Okay, the law of effort states that, you know, if we push back down into a certain region of price and have a very strong reaction from it, the effort is back to the upside in this situation. Okay, so having no wick to the upside here, very nice candle that has formed after liquidity is taken. So the open of that candle would be very nice if we come back down into it, 1.3766. Just the mitigation trade, ladies and gentlemen, that's really what it is. It's just playing off of these swing points in the proper location in which price was originally looking to take liquidity. In this case, it was right here. So the open of that candle, in this case, it would be a 50 pip stop, but it would be a 126.28 all the way back up into our higher time frame buy to sell level, taking liquidity here. So there's a lot more that I could go into in these sort of levels and why price reacts from these levels, and understanding that even if price doesn't react from these levels, how can you confirm before taking a trade? You don't just simply place a buy limit. I mean, you could. It could be a little risky, or you could wait for price to do a series of things within these levels here before confirming that upside is expected. That could definitely increase your risk to reward, and I could get even way better risk to reward than a 1 to 6.28. But still, 6.28% on your account is phenomenal. Plus, we have these equal highs. This is going to be the draw on liquidity. So there we go. All right, a lot more I can go into. I'm going to save that for the course and the VIP members. Just giving you guys a general overview of kind of how we break down charts here. So next, GBP CAD. Similar to GBP USD, I want to see more pound strength. I really do. Now, higher time frame, we can see that obviously we are in a bullish market, right? We have created a higher high, higher low, looking at a higher high. Now, our previous swing point right in here, we can see that we took liquidity from these equal lows, this low here and this low here, way over to the right here. We finally came into that level 1.71633. Why was this an important level, and why did we react off of this level basically to the T? Well, it's because we had a last selling volume before the big buyout, very strong reaction. So the imbalance fill and the sponsor candle associated with it, and the fact that we gapped between price here and here, the imbalance fill is generally where we look to get into the market there. Obviously, there are more criteria, and I can kind of go over what was seen here in the charts, but that was our higher time frame level. Obviously, we waited for a reaction, we got it, and then we can scale into lower time frames. We can see the law of effort here. We can see the massive push up and the time it takes for it to pull back very slow. We had one final sell to buy, coming back down into a lower time frame selling region of price, the last selling volume before the big up move, which is indicated with this orange block. Now, higher time frame, what did we do? Well, we had equal highs, so that was good that we took it out, right? Drawing liquidity. So after we made a move here, took the liquidity out, and now what can we see? So now we can see that this counter trend move here, see lower low, lower high, lower low, lower high, lower low, lower high, lower low. This is a lower high compared to this one because we didn't close above it. We whipped above it, taking liquidity, but we never closed above this level here. We made a lower low, lower high. We failed to make a lower low, and then we made a higher high, not only above this high, but above this high. This is the real swing point here. Okay, so having a closure above this level signifies that higher prices probably are coming soon. So I'm just going to get rid of all these purple lines here. So the structure has been broken. What I'm looking for now is the fact that we reacted off of this level with this push here. The fact that we pulled back or so slightly, had a massive sell to buy within this region of price after coming into a block here on a lower time frame. We finally are pulling back. If we can see some sort of reaction from this level tomorrow morning, I will be looking to buy this up. Would be very similar to GBP USD. All right, moving on, AUD JPY. Now AUD JPY, this is why it's so important to do top down. Well, now it kind of looks a little funky in here, and we are in a higher time frame uptrend. That is definitely the case. So I'll get to that in a minute. However, you can see higher high, higher low. Looking at a higher high, we just accumulated liquidity right in here. All of this, all these equal highs, we accumulated it, right? We finally had our last push, huge buy to sell that took liquidity, and we came back into this sort of structure, filling imbalance where this prior structure was. We can see resistance, a little bit of support, and now resistance again. This is why price probably reacted off of this level here. It's because of the reactions from here in the past. So liquidity has been taken. We broke back to the downside. Doesn't mean that we're going to continue short overall, right? We could, after pushing back up into here, which I'll get to in a minute, could have another overall pullback back down into sort of this last selling volume within here. That would take care of the structure associated with these higher highs, higher lows, higher high, higher low, order region here, right? So maybe short term we could pull back up into here, but higher probability setup would be the buy back down into here to go higher, making a higher high in the sequence. So scaling in, I expect higher prices overall, maybe within the next couple weeks. But scaling down really into lower time frames here, this is the area of price where price took liquidity before falling. And it can be seen where we pushed up, swept liquidity, pulled back down, created an LPS formation, and then pushed back to the downside. So this last buying volume within here is something where I think price can come back into even if it does fall. So if it goes long, then fine, it'll break this and keep going long. But if it does go short, I do think we have to come back up into this level first before going short, which is why I want to buy at counter trend, because we have broken counter trend structure. So we can see that the level 83.079 has been met, and that was on, I think it was like some sort of like sub 5 minute time frame. Imbalance fill down in here, but it reacted perfectly, and we can see the break of structure here. We can see lower low, lower high, lower low, lower high, failed to make that lower low, higher high. We broke the structure in here. So I believe that we are to go higher, and I think the target can be 84.15 at least. So it could give us, a quick 1 to 3 or 1 to 3.85. I'm going to go into these levels here in a minute. So scaling in, what do we see in here? First of all, why did we react off of this level in here? Well, one, it's because we formed a schematic before coming back down and springing from the level. Normally, you'd like to see the spring. This is where we teach in the Wyckoff course. We'd like to see the spring in and around the higher time frame levels. So we had our selling climax, our automatic rally, right? Buying intent, right? Trying to get people to buy, but the intent to buy was the most important thing. Pushed back down, secondary test, had our spring, we broke structure, lower time frame, we chopped around one last sell to buy. This was the UTAD here. We pulled back one more time back into the UTAD, creating this demand level, and then we shot off. Now, I'm not going to go into all of the different points of how we identified Wyckoff and the schematic within here. Just giving you a general overview of kind of what we saw last week within this. Then we created a head and shoulders pattern, right? Head and shoulders enticing the sellers to come in. This is why retail just doesn't work. Selling comes in, they're in profit. Nope, right back to the upside, took their stop losses, creating a sell to buy. And we reacted right off of this candle, this demand in here. What you could have done is you could have gone to the 1 minute time frame. You can see here, lower low, lower high, lower low, lower high, lower low, higher high, kind of broke structure, didn't really close above it. However, we did see a reaction from this level perfectly with a strong reaction. So any pullback, it would have been risky, in any sense, just because we never really broke structure to the upside on this 1 minute time frame. But you could have taken risks if you had have taken risks really just right at this imbalance fill here. See 1, 2, 3 pin pattern engulfing, 83.2. I already calculated it last week. You would have had a 2 pip stop, a 40 pip take profit all the way up here. You would have taken profit. Oops. Well, actually, you wouldn't have taken profit. If you had have taken profit up here at like 83.6, it would have been a 1 to 20. If you had have held, it would have been more. Obviously, if you did take that all the way down there and hold to really up here, it could have been huge, like 1 to 60, 1 to 70. And that's how you catch these big risk to reward trades. Now, zooming back out, we can see the retail pattern was failed. Sell to buy. Okay. Now, it came into demand. Now, why am I looking at these two levels? Could we come lower? Yes, we could come into these lower time frame demand in here, but I don't think that price will come lower than the swing point that we made last week, which is why I have my stops there. Now, 50% of this sell to buy move lines up with 83.38, which also happens to be where we initially started the selling off right in here, sell to buy, that because we built up liquidity, right? Equal lows, low, 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 low. This right here is the candle that started the influx of sell orders to take all that liquidity and create that sell to buy. Happens to line up with the 50% very nicely. So I have my entry there. Well, actually, I'm not going to be entering here right now. I'm going to be waiting tomorrow, but these are going to be my levels of interest. And then 83.41, I believe, is the hourly open. Yep, it's the hourly open where the higher time frame liquidity was taken, sell to buy, right? Higher high was formed. So looking at overall pullback, we have formed equal lows. I do think we can come a little lower. Maybe we can form some sort of right shoulder here. If we can do that, that would be very nice. Head and shoulders. Why do I like this? Because then it would fake out the sellers after we break structure here, and we can take their liquidity and their stop losses back to the upside as we would be in profit from these levels. Now, I'm not going to be trading this tonight. If it happens to hit tonight, oh well, I'm not going to be doing it. It's not part of my rules. I'll be waiting until the morning after Sunday has finished, after Asian session has finished, into Monday morning New York session to be looking at these trades. But you can just see that the different concepts and the reactions from these levels, this is why it's so important to be patient, guys. If you guys are taking 5 to 10 trades a day, that's not professional. You guys don't really know what you're doing then. And, that's just the truth. I'm not trying to sound like a jerk, but it's the truth. And some of you really need to step back, be more patient in your trading, and write down a set of rules and be disciplined with those rules. You don't need to be trading every day. You don't. Some days I don't trade at all. If it doesn't meet my rules, I don't trade it. So this would be one of my rules, waiting for tomorrow. If it does, form a setup. Not always is it okay just to set limit orders at these levels. Sometimes it's very important to wait for reactions, and obviously I have my criteria for entering once I have confirmed what I need to confirm it here. Obviously I'm not going to say it in these free videos, but within the VIP they understand. Anyways, AUD/USD, last one. We can see here higher prices need to be met here. This is why I think AUD/JPY can go higher. At least, AUD/USD back up into this sort of supply level. I will be looking for shorts around this level, but I do think price needs to come higher into this level first before potentially shorting off. Now, higher time frame, we did come into this supply level here to the T last week. We did sweep liquidity. You can see these equal lows with this massive sell to buy move. And we are in an uptrend. So we could easily see higher prices overall, could make a higher high. So I will be looking for buys. The dollar is still quite weak at the moment. So any XXX/USD buys would be probably on the table for the week. So we can see here that we have an imbalance level here, right? Imbalance that has yet to be met. If I go to the lower time frame, we can see that after we have swept liquidity, sell to buy actually lines up with the structure in which liquidity was taken. We can see a chop in price creating this demand level here, and also happens to line up with the imbalance. We never came back down into it. Do I expect us to come back down in here? No, because of structure. However, we could, and I will be looking for reactions if we do come back down into here. However, daily time frame, we can see here daily 50 EMA is on our side here. We're looking to continue to buy it. And the reason why I'm looking to sell it within this region of price here is because we never came back down into this demand, higher time frame demand. This is where we pushed up and started to stall out, chop, 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 before making another explosive move to the upside. We can see that the imbalance has not been filled. This is the high here, and then here we have not come down into that prior high, right? So I do think we have to at least wick into it, come back down into this sort of swing point demand level on a higher time frame before making a higher time frame push to the upside, which is why I like the supply level here, right? You can push up into it, look for reactions, look for our rules to be met within this level. We can potentially be seeing a shorting opportunity down into this level, or maybe even further within this whole entire range of demand. And we can see the head and shoulders formation, right? So shoulder, head, shoulder, right? We may come back up into here, fake out the sellers, right? Because all the retail traders sell off the break of the neckline, right? Could be a little bit of a retest, come back down, entice the sellers again, and then just moon back to the upside, taking all their stop losses because they either play stops above the shoulder or above the head formation right there. All right, that's just how the banks look at it. That's how they draw up their liquidity, and that's where the liquidity rests. You don't even have to know that, above the shoulder is where they have to take liquidity. It's just kind of just a generalized location as to where they would like to do it because of the pushes that they're making, right? People are buying again, they sell off, right? Selling off, creating support right in here. People are buying up again. Liquidity above the highs here. They look at the shoulder, prior structure. That's why they play stops above the right shoulder. And that's exactly why we're seeing liquidity above those levels, which is why the banks look to target those levels after they fake out in all the retail traders, right? So I know that was a lot. If you have any questions, please feel free to message us on Instagram or Telegram. We'd be happy to answer any of them. But yeah, those are the levels in which we're looking for. Now, I'm not going to go through my whole list here. I do have other setups, but I'm not going to go over them today. I think it's for your benefit to look at just a few of them in depth and look at exactly how we break them down from the higher time frames to the lower time frames, so you can kind of get just a general overview of what you need to be looking for in terms of the concepts, the levels, why price reacts off of certain levels, why price, why liquidity is taken at certain levels. We have other YouTube videos. We have our Smart Money Concepts videos, our Wyckoff Wednesdays videos. Feel free to check them out. They are completely free to you. And of course, if you have any questions about them, please feel free to message us. We're always here to help. Now, if you are looking for a boost in your trading, if you want more knowledge, if you want to dive deeper into these concepts, please feel free to message us. Our prices are going to be increasing on the 1st of May, which I believe is this Saturday, because our content we feel is very, very valuable to us. And so we feel like an increase in prices would definitely reflect the true value of our content. So if you'd like to get in on any of our VIP services or our courses, feel free to message us. We'd be happy to get you in at the discounted price. And yeah, we do have our Wyckoff Wizard indicator that we had just finally released. It was originally available only through course purchase, which is still recommended because you get to understand why the Wyckoff Wizard indicator does what it does based off of your knowledge that you obtain from the course itself. But if you would just like the indicator, which a lot of people have absolutely loved, we love using it. It has helped us tremendously in our trading as well. Sends you buy and sell alerts straight to your phone. All you have to do, just look at it, make sure it's suitable for you, and you can take the trade right then and there and profit. So that is available on MQL5, and we will post the link to that in the description, so you'll have access to that as well if you so wish to. So that is all for me, guys. Take what you have learned from these videos, apply it to yourself, become a professional, profitable trader. I know you guys can do it. You have the potential. It just takes time and experience. So never give up on this. I'm telling you, it is so rewarding. So until next time, thank you guys so much. We'll talk to you soon. Thanks.